Shweta Joshi. On behalf of research team of Axis Securities, we will talk about the market outlook today. On the fundamental side, Indian indices are expected to open in the green, with SGX Nifty trading higher by 1.19%. The US markets ended higher as better than expected jobs report boosted investor sentiment. Dow Jones gained 1.77%, while Nasdaq gained 1.79%. What to watch? Government of India to release Jan IIP and Feb CPI data today. India's oil demand rises 7.7% YOY in February to 16.7 trillion tons. On the corporate news, Tata Motors Group global wholesales have increased by 18% YOY to 1.21 lakh units in February. MOIL has approved the setting up of ferroalloy plants at Balaghat and Gumgaon for Rs 418.8 crores. Bharti Airtel has announced that NCLT approved company's proposed merger with Indian unit of Norway's Telenor. The theme for today is FY19 to see muted recovery driven by rural consumption, investments and exports. As we expected, one by one headwinds to our three-pronged growth recovery story are gathering. The first one being protectionist measures being announced by US, which started with 25% import tariffs on steel and 10% on aluminium, although it softened the stance by exempting its neighbors Canada and Mexico until the NAFTA agreement was redrawn. Europe is preparing to retaliate its strikes strikes imports of American whiskey, peanut butter and motorbikes, etc. China and Japan too have sounded their own warnings. Besides that, Trump is now slated to have a historic meeting with nuclear-armed Kim of North Korea, and that will be a key which will drive the markets forward. At home, the banking system has come under a dark cloud with unearthing of frauds and the regulator removing all earlier dispensations of recognition and restructuring of assets. Besides a premature full turn in the interest rate cycle due to fiscal and inflation concerns further endanger the nascent credit growth uptick. Reports of a bank pulling back credit facilities given to firms are fallouts from risk aversion. So both higher cost of capital and tightening lending culture could hamper the investment recovery. Finally, the extent of rural stimulus hangs in balance with the government yet to outline its new MSP policy. Besides, there is no clarity on how GST compliance will be improved. E-way bill and invoice matching are yet to be implemented. Weak traction on revenues would mean that government will have to economize on spending. A lot of grey areas remain on the near-term outlook, which portends market volatility as participants begin to question price-to-earnings multiples. On the technical front, the Nifty started the week on a flat note but continued its previous week's negative momentum to end the week on a weak note. Nifty closed at 10,227 with a loss of 232 points on a weekly basis. Since past couple of sessions, index is hovering around its 200-day SMA 10130, which remains a crucial support zone to watch for. The chart pattern suggests that if Nifty crosses and sustains about 10,300 levels, it would witness buying, which would lead the index towards 10,410, 10,520 levels. However, if index breaks below 10,150 level, it would witness selling, which would take the index towards 10,070 to 9,980. Some positive stocks: Hexaware, Suprajit, RK4, Jubilant Food, Marico and Bajaj Finance. Negative stocks: Jindal Steel, Just Dial, DLF, IGL, Century Textiles. Coming to USD INR, it closed at 65.29 with a gain of 0.07%. The chart pattern suggests that if it crosses and sustains above 65.35 level, it would witness buying, which would lead USD INR towards 65.50 to 65.6 levels. However, if USD INR breaks below 65.20 level, it would witness selling, which would take USD INR towards 65.15 to 65. On the derivatives front, the Nifty futures closed at 10,218, decreased by 0.14%, with 0.83% decrease in open interest, indicating long liquidation. FIs were net buyers in derivative segment to the tune of 30 crore. India VIX index is at 14.52 and index option PCR is at 0.81 and FNO total PCR is at 0.78. Among stock futures, Torrent Pharma, Capital First, IFC and Ashok Leyland have witnessed long build-up and may show strength in coming sessions, while on some stocks that showed short build-up are ACC, IGL, MFSL and Allahabad Bank and may remain weak in coming session. That's it for the day. Thank you.